Now, Nigeria's stock market ended this week on a positive note. The NSE All Share Index posted a moderate gain of almost 0.4% to close at 37,765 points. So for the week, the market was up only 0.81% amid a flurry of earnings released. Well, joining me now to review the week and for the results seen this week is Chukwuma Onyanda, who's the head of research at Morgan Capital Securities. Thank you so much for making the time to join us today. Let's get straight into it. Can you review today's market performance and what were some of your standout stocks?
The stock market in Nigeria ended on a positive note. The market was up 0.38% to close on a bearish note after today's trading. It's expected. We've seen a lot of results, third quarter earnings coming into the market, and as expected, we've seen portfolio rebalancing on the part of investors, taking positions in stocks that right now present good entry points, considering the fact that the third quarter results were fantastic. And in that light, we've also seen not so decent performances by some companies on the NSE. And as such, market is also reacting to it. So generally, we've seen the market positioning itself, investors positioning themselves to take advantage of the companies that have turned out good positions in their third quarter earnings.
Now, before we move on to the banking or the non-banking sector, rather, let's rather talk about the banking stocks and the reaction or the impact that we've seen with some of the regulation coming into place. Looking at the CRR on the Q3 earnings, I mean, what have you made of that?
We've seen that the CRR largely impacted the performance of some of these banks. Most of them didn't really grow quite as well as we expected them, and that's on the back of the hike in the CRR to 50% by the CBN. We've always had the opinion that it comes down to the strategy of each of the banks, and the big banks, the banks in the top cadre, stand out to have actually have a lot more advantage, considering the fact that they have clout in the sector, and banking is largely a volume-driven business. The size of your balance sheet determines to what extent your capacity to earn is. On the back of that, we've also seen not very encouraging results from the lower cadre mid-tier banks. So generally, we've seen the CRR hit the banks' earnings, their capacity to earn in the third quarter. But having said that, we are optimistic that adopting the right strategy will see these banks delivering sustainable growth in their earnings going forward.
Can we zone into one specific banking stock? I'd like to talk about Zenith Bank. When we look at the impact or the type of impact we have seen the CRR have on it in the third quarter. But looking at it, the evaluations for Zenith, according to some of the reports, saying that that stock is undervalued. Would you be in the same boat to agree?
If you consider the capacity that is inherent in the balance sheet of Zenith Bank, it's a very good company. They have a solid balance sheet. It's one of the standout performers so far we've seen, according to our own valuations. We think it's undervalued, but it's also important that we re-emphasize the fact that your strategy to cope with the hike in CRR and other issues around the sector will go a long way to determine how well your earnings will turn out when full year numbers come in. So Zenith, we think it's currently slightly undervalued. We think there is still some 14% upside potential on the stock at current prices. I haven't said that it's important that the company focuses on its growth strategy and see how they can aggressively grow their balance sheet to ensure that their earnings are sustained going forward.
Now let's move forward out of those banking stocks and just talk more broadly. Given the Q3 earnings that have come out, what other areas of opportunities would you say there are based on what we've seen over the quarter?
Oh yeah, during this period, the third quarter, usually it's important to focus on the winners by the year end. And at this point, given the expected festivities around the fourth quarter, we would focus a lot more on the food and beverage companies. We think there is a growth potential, particularly at this period. They usually do well in the last 2 quarters of the year. as a result of the associated festivities. We have also seen fantastic performances by companies in the building materials sector. Dangote Cement turned out a fantastic third quarter performance. Also Lafarge Wapco. So we think there are potentials for growth for the long-term investor who borders with the numbers and who expects sustainable growth going forward in the next couple of quarters and in the next fiscal year. So Dangote Cement, Lafarge Wapco, Dangote Sugar, Nascon are all good stocks according to our own valuations at current prices.